Welcome to Charting the Markets on this March the 6th, as we continue to monitor what's been an interesting market where people still seem to be wanting to look at risk in some areas of the market. We've got a lot of focus on what interest rates are going to be doing around the world in terms of some of the central bank decisions over the next few months. But let's kick off, first of all, though, with our guest and introduce Serge Berger, our regular early monthly guest on Charting the Markets. Serge, welcome. From thesteadytrader.com, we've been talking about where to start off this discussion. I guess the right place is to take a look at what's been happening with gold, with the recent record highs that we've got. Precious metals, in part, have been an interesting debating topic over the last few weeks or so, but gold has taken the prize because it's just risen to a new record high. Let's ask you the outright question. How do we trade this, given the environment, and what do you think's behind the move that we've seen?
Hey Jeremy, yeah, I mean, I tell you the move in gold here, and I'm using the GLD ETF. It's divided by 10 on the CFD on the IG platform. It's probably one of the more exciting moves I've seen in a long time, because the technicals match up. That's one thing, but also, you know, if you think about what's the driver for this, I mean, there's some of it might be the driving Bitcoin. Maybe as we're heading into more the political season now. You know, maybe there's a focus on that. But I think it's quite interesting what we're seeing here. So the GLD, or gold, it's having a pretty significant breakout. And if you follow technicals and you follow kind of how algorithms work, you know, this is like the 6th try on a weekly time frame. The daily time frame is even more convincing to break higher here. And it could be significant, you know. Once it gets going, we could see a significant move. I mean, the time frame is always a question, but ultimately, I wouldn't be surprised we see 250 on GLD, or I believe that's about $25 on the CFD on IG. So that's what's going on in GLD. It's choppy, so it's always difficult. I find it a very difficult asset to trade. But I think taking a position here in this, you know, it does make sense from all the reasons I just mentioned.
Yeah, let's ask you the question about what's happening then with silver, because, as I say, it's always looked at as another precious metal. When you get this move in gold, sometimes it surprises people that silver hasn't moved up by as much. It has seen an appreciation, but it's only at recent highs, not record highs.
No, it's not. And actually, this is really interesting. I just had a chat with some of our clients about this yesterday. When you have a significant move in gold, and I think this move still has to prove itself a bit further, silver not only tends to participate, it actually tends to actually outperform. So if we take silver here, and I'll just quickly make this line charts, and we overlay gold on it, you can see that gold's already made that move. Gold is aptly in orange, and silver is still, you know, working on that breakout. So not only should silver follow, it ultimately should actually outperform. Part of that is because it's a more volatile asset. So silver, to me, very primed for a move. Timing is always difficult on this stuff, but gold's leading the way here.
Yeah, one of the ways, as you say, is to trade the asset class itself. The other way to trade it, of course, is to look for areas of the market where there might be some extra leverage to be had with earnings coming out from individual mining companies. How important is it to keep an eye on miners generally when looking at this rising gold?
Well, I mean, miners in many ways are just a more levered way of playing this whole move, right? It's all it is. It's levered, it's volatile. And so I always try to warn people of the volatility of this. The blue line here is the gold miners. I'm using the GDX ETF for that represents gold miners. I think gold miners are really, again, it's a derivative of gold. So if one wants to lever a bet, then GDX. What's important is that gold's making a move. That's really the fundamental driver for the moves in gold miners.
Yeah. Let's switch the focus back onto some of the other topics we've spoken about before. I noticed actually yesterday we saw some of the biggest declines on Wall Street coming through for tech stocks, particularly those that have made the most gains recently. And of course, we've been talking a lot about what's been happening with semiconductor stocks. I noticed actually with interest amongst the Magnificent Seven that fell yesterday. In fact, Nvidia was the outstanding performer on the upside. This semiconductor stock has really stolen the headlines on the upside. Doesn't seem to have any ceiling on it at the moment. How should we trade semiconductor stocks in this tech space?
Yeah, I mean, momentum begets more momentum, right? That's the game. I just put something on the YouTube short this morning. I think Nvidia. Listen, if they're gonna go for round numbers, and excuse me, at this point, I'm not quite sure it's even much about fundamentals anymore. It's momentum, right? It's a momentum game, and if you think about ETFs that allocate money to this, they're indiscriminate buyers. Does Nvidia go to 900 or 1,000? It's entirely possible. 900 is about 5% from here. 1,000 is about 15, 16% from here. I will say though, and this hasn't mattered yet, but if you want to be very technical about it, and it begs to be cautious about this, but the candlestick formation over the past couple of days, where we had an exhaustion candle followed by this other kind of candle yesterday, can lead to potential top forming. So just something to watch out for, but I would not at all be surprised if we see 900 or 1,000. So I think critical levels here. But more importantly, I think the MAG 7, I think it's MAGS is an ETF for that, MAGS. I mean, they're definitely getting stretched, and I would not be surprised if we're seeing rotation into other parts of the market, like biotech, from a momentum perspective. That makes sense, because it's still a momentum market, and it's probably more about rotation at this point.
Yeah. Okay. So far we've been talking about things that are readily available to everybody in the market. I want to dwell on a subject which I know is a sensitive topic, because it has been the subject of a warning from a number of regulators. The Bitcoin, because of the wild gyrations in this market, Bitcoin is not available to trade directly for a lot of traders. But I do want to highlight what's going on in the Bitcoin market, and those that can't trade because they might not have the qualification to trade Bitcoin. There are other proxies to trade this market, such as the exchange traded funds that have come up recently, and also ways in which you can engage with companies. There are proxies like Coinbase, for example. But I do want to focus, if I can, with you, Serge, on the Bitcoin move that we've seen. And in your mind, what is behind this rise to these new record highs?
Yeah. Let's start off with, if you don't mind, with the long-term logarithmic monthly chart. And here you can see it's an asset that's volatile, but also it has a steady upward movement. And there's a couple things that I increasingly believe that are driving this. I mean, in the very near term, we're seeing the ETF inflows. I mean, I think the BlackRock ETF IBIT is now something like $10 billion in like 5 or 6 weeks in AUM. I think it's the fastest growing ETF ever. And it's because a lot of investment advisors. I myself have an investment advisory firm in the US, and we're now allocating to these ETFs. So that's the big driver. And again, like I said before, these are indiscriminate buyers. So an ETF does not care what the price is, the price of Bitcoin, the price of anything. So it can push it up to whatever level. And there's more and more investment advisors in the United States, RIAs, that are still coming on board and approving internally that it's now okay to buy these ETFs. The other thing that I think is really interesting here is the belief system. When I talk to my generation and younger generations, there is an unbelievable belief system in this, in Bitcoin, and that I think is something we should not underestimate. So ultimately, if we just from a technical perspective on this chart, if we start moving higher out of this next base, next stop is 250, 260,000. Now, again, that can take time. That will take time, most likely. But there is that potential of an outside shot to because of the indiscriminate buying of ETFs, that we go there quicker than people think, at least for a trade.
So, talking about some of the momentum trades in this, and looking at that potential upside that we've got, there is a halving coming for Bitcoin. Is that significant as well to add to the upside, or does this have an opposite effect, or how would you trade the halving?
It's an interesting question that we've been pondering for the past few months, and I think the bigger catalyst was the ETFs, because it gave sort of like a government blessing of not of Bitcoin itself, but of the ETFs at least. The halving is interesting. We're actually just the other day made a new all-time high before halving. The halving, I think, is set to place 20th of April or something like that. I think we're going to go from 900 BTC to about 450 Bitcoin a day, something like that. And that's now with an entire new asset class being blessed again by the government, basically, and an entire generation, the baby boomers, which still have all the money, now basically, or at least some of them piling into this. I think the halving is important, but I think, and that's, again, it just takes a lot of supply or new supply off the table. But I do think the ETF is a bigger driver of price here at this point.
Yeah. Okay, Serge, right, look, thanks indeed for joining us for this first Wednesday of the month. It's been a pleasure catching up with you. Some of those record highs we've seen in some of those markets. That's Serge Berger from thesteadytrader.com, and you can catch up more with Serge on his website. That's it for today's Charting the Markets.